Okay, today we're going to be talking about a trending topic. How do private second mortgages work? So when somebody says, I'm going to get a mortgage, in most people's mind, they're thinking of a bank and they're thinking of a conventional mortgage, which would typically be a first position mortgage. People can get second mortgage from banks as well. Imagine that person who got their conventional mortgage 5 years later, has paid down that, their property's appreciated, they want to be able to borrow more from that same bank. That bank may re-advance them or give them more money as a home equity line of credit. When their lawyers go to register that charge on the mortgage, they're going to register that as a second mortgage. So first, a second mortgage, very simply, means a second amount of debt secured by the same property. One property, and on the charge of that property, you have first ranking mortgage and a second ranking mortgage. It just matters that when that property sold, whoever ranks on title as first position gets paid out in entirety first, and only when that last dollar owed to the first mortgage is paid out, then the second mortgage starts to get paid out. It's unlikely that somebody wants to have a second mortgage, but it's most likely that someone is using a second mortgage to fix a different or existing financial situation. I'll try to put them in the 5 buckets that I see most commonly. If you're somebody that has $50,000, $60,000, $70,000, $80,000 of credit card debt, you don't want that either. Practical use case for a private mortgage is to consolidate existing other debt. So what we can do, or what private lenders would do, is they'll look at all the different debts, credit card, car loans, consumer debt, student loans, that are charging a higher interest rate than the cost of borrowing that the lender would charge for the private loan. And if this person also has equity in their property, they can consolidate all of that debt into one payment to one lender. The next most common is sort of related to that, a life event. So this could include family death, divorce, separation, supporting elder parents, kids. This is something that happened unexpectedly or as a temporary issue that somebody needs to deal with in their life. And in many cases, this could have affected their credit and ability to borrow from a bank. So private mortgages, and specifically second mortgages, are often used to help clients who are experiencing an immediate life event. As they borrow on a short-term basis, typically 12 months, they can then work with their mortgage broker to use that 12 months as a runway and figure out a longer term plan. Often the private mortgage is the first step in, let's say, a 5-year financial plan. So now moving on from the debt consolidation, family or life events, let's talk about issues of timing. So often private mortgages, there's 3 issues of timing that come to mind. Number 1 is you expected the banks to close and the banks are not going to be able to close in time, and you risk breaching your contract to purchase a property. Private mortgage can close in as quickly as 48 hours and can allow you to make sure you don't lose your deposit or don't lose the opportunity to buy that property. That can be extended to pre-constructions. I've seen many clients who bought properties 5-6 years ago. They have already paid their 20% of deposits throughout the term. And at the time of closing, they just assumed they would be able to qualify. And if they don't close on the closing date, they risk losing all of the deposits they've paid as well as the accumulated equity in their property. And the last issue of timing is bridging in between buying and selling properties. I've helped clients who have bought a property and that closing is scheduled to happen before the actual sale of their existing property. And most people who are moving from one place to another need the dollars from the sale of their property to pay down or contribute towards the purchase of new property. So private bridge loans can be used in those cases. I think next and last, we'll talk about the bucket of real estate investors who use private mortgages. Clients that have 5, 10, 20 properties even. Of course, it's their prerogative to borrow from the bank wherever possible, but different banks have different caps with respect to how much debt they'll give to one borrower. And if at that time where they're at their debt capacity, they may have a really good opportunity to buy a really lucrative investment property. And so they would be willing, they'd actually, dare I say, want to take a private mortgage to pay more for that on a short-term basis so they don't lose the opportunity cost of buying this really good investment property. So there's 95 other reasons. I've seen people who are expecting settlements, who are expecting money from overseas, who are expecting inheritances, and you name it, there's now 92 other reasons that people might choose or benefit from a private mortgage. But hopefully those 5 buckets illustrates the most common use cases for helping someone improve their financial situation with a private mortgage.